And to discuss the Chinese economy and the ag bank float, I spoke to Todd Martin, the Asia equity strategist at Societe Generale in Hong Kong a short while ago. Todd Martin, welcome to Late Line Business.
Thank you for having me.
Can I go first to the China GDP figures, slightly below expectations, but importantly, investment has been coming down. Are we going to see demand for commodities falling?
Very likely, yes. The SocGen economics view is that China is slowing. The number indicates that investment is coming off, and that, if anything, we're probably going to see some fiscal and monetary stimulus coming up over the next month or two to help on the demand side.
Should we be worried down here in Australia? I say this because the Baltic Dry Index, the measure of commodity shipping costs, has fallen for the longest period in 9 years due to lower volumes of iron ore shipped to China. And also, Rio's Tom Albanese yesterday talking of fears of a double-dip recession and a slight slowdown in Chinese growth. Is that going to impact a country like Australia?
Yes, and I think you make a good point with the Baltic Dry Index. People also just point to the overall commodity index that's also off from its recent highs over the last 6 months. So yes, I think we are going to see, for Australia in particular, a fall off on demand for commodities. The prices are showing it, and the shipping prices are showing it. At the same time, as I mentioned earlier, I do think that you're going to get a response from the authorities, and you're going to get some of the projects that China had already planned on, around 42 trillion RMB, of which I think there's already still around 32 left this year. They're going to get ramped forward. So yes, it will come off, but they're going to be coming forward and trying to pick up the demand. We're still looking for 10% GDP growth this year, and SocGen Economics Department really hasn't found reason to downgrade yet.
Our government yesterday altered its forecast terms of trade to increase 17% this financial year, largely on the back of the mining boom. Do you think that's reasonable in that case?
That might have to be adjusted a little bit. So, as I mentioned, looking at the shifts in the commodity market, and probably with markets coming off, you will be seeing some pressure on commodity prices. So, yeah, those will be adjusted forward over the next quarter.
Now, turning to the ag bank IPO, trading is just above the IPO price, I gather. Is that a little disappointing?
Well, it depends on who you ask. I personally feel that 0.8% up in a market that's down almost 2% isn't a bad first day. It seems that a number of entities out there were expecting a 5 to 10% pop on the first day. I still think over the next week, possibly we could see up to 3 to 5% upside. I just think that the market was absorbing these GDP numbers today, and it seemed to have spooked the market a little bit. I still feel that the market's going to respond to any sort of fiscal and monetary measures that China comes forward in response to these GDP numbers. That's probably going to spur on stocks. So I still have yet to see this play out. I don't think day one makes an IPO.
Do you think the green shoe will be fully exercised? Because if that's the case, it will be the largest IPO, won't it?
It would be. I know that this morning Ag Bank officially came out and stated that they were going to move forward with their green shoe. They have up to 30 days in which to fill it. In addition to that, you also have the two underwriters of the H and A shares, CICC and Goldman Sachs, who also can claw back a certain amount of shares that they use to stabilize the stock through trade. So we really won't know until for another month whether Ag Bank is actually does reach its the potential for being the biggest IPO ever. But they're certainly going forward with the green shoe. We'll just see how much of it gets filled.
Kerry Stokes' Seven Group is a cornerstone investor. He sees this as a strategic investment that will help his Caterpillar franchise in China's northwest. Will it?
Well, if you look through the share registrar, there's quite a few different strategic investors involved in AgBank, and quite possibly, yes. ABC is the biggest lender in the countrysides of China, and they're going to be involved with a lot of the development projects in those areas. So my short answer is yes. I think, very interestingly, just last week, we had China announce, I think, another $100 billion in investment projects out west, of which I think Agricultural Bank is probably going to be quite intimately involved with. So, yes, to your question.
And finally, China's leading credit rating agency, the Dagong, has stripped the US, Britain, Germany and France of their AAA ratings. Is this politics, do you think, or a different way of rating sovereign credit now?
Well, if you actually listen to their statement and their mission statement, and they state that their credit rating agency is actually looking at the ability of the sovereign to pay, period. So whether you take that as politics or not, interestingly enough, you had the ratings of Brazil and Indonesia upgraded in that case. So I think in everything in life, there's probably a little bit of politics, but I think it's only healthy that we get a different voice of ratings globally, quite frankly. And given the fact that China is such a large global investor, I think it's only prudent that they have their own rating agency.
And presumably today, one's ability to pay is getting rather important.
Yeah, that's a very that's absolutely true. And we're going to be seeing that becoming more and more important over the next 6 months.
All right, Todd Martin, I thank you very much for joining Late Line Business.
Thank you for having me.